Hi everyone, welcome to our next lecture where we explain or where we give you strategies from UNICOASTER Trading Group, right? So we provide you with 3 strategies. There are many strategies that you can implement, but the main aim is to know how do you create a strategy, because we say a strategy is like a plan, right? You follow your plan when you are getting in a position, right? That's what we call a trading strategy. It's a plan, right? A strategized plan to say where do you get in, where do you get out. So from this we'll give you an example or a structure of a trading plan, right? So we have 3, but you can create as many as we want. I've just provided you with 3 so that you get a grasp of what a trading strategy is. So if you click here, let me do this. If you click here, it says download. We provide these strategies in resource, so you need to go and download in resources you'll be provided with, right? So it's already open, so I won't open it, but I will provide with you. So the first strategy is what we call time simple strategy. It was developed in 2019. I developed it in 2019. So the profile of this strategy, it's a strategy that is based on multiple time frame analysis. As a disclaimer here before I move on, this is very important. You need to understand this slide. Very important stuff, right? So it's a multiple time frame strategy analysis. So what you are saying multiple, we are saying you are starting from higher time frame going lower, right? That's what we are saying here with this statement here. Multiple, right? Time frame. We are using what we call different time frames to analyze what's happening in higher time frame, what's happening in shorter time frame, right? But in this course I'll try to do what we call day trading so that we can finish this course, right? So decide whether you should go long or short on a high time frame, right? So remember that support and resistance are more significant. Very important. Remember, it is very important. As I said, I always try to explain what is very important. So more supports and resistance are more significant in higher time frame, right? Lastly, this strategy is based on whether the market is ranging or, so it doesn't matter if the market is ranging or trending, right? So you just need to use tactical decision on where to enter and where to get out, what we call exit positions, right? So is this is quite of experience of my skill, right? But I won't go through this because I need just to explain on how do you go through, how do you analyze. So the first thing is what I wrote here is a trading setup. What are the setup, what are the conditions that you need, right? So the first thing is you trade this strategy that I said here, time simple strategy. We're using different multiple time frames, right? So you should trade on, you don't trade on this, definitely it's a day trading strategy. I use it as a day trading, so it can so the time frame that you need to analyze are in this range. So from day, 4 hour, 1 hour, 30 minutes, 15 minutes, right? So I usually trade on 1 hour 30, but I start analyzing from 1 day. I will explain. So for now, don't worry. So you should select on time frame before you know the ranges of multiple time frames that you are working. You are starting from day up to 15 minutes, right? So you now know the range. Then you should select the time frame you should trade. Are you a day trader? So I personally like to trade this strategy from 1 hour, 30 minutes, 15. So I have 3 multiple multiple time frames that I use, right? That I trade within this strategy: 1 hour, 30 minutes, 15. But as I said, I start from 1 day, so I explain. So first thing, go to a bigger time frame to analyze if there are good supports that are more strong or significant in higher time frame, right? So which higher time frames are we talking about? It's 1 day and 4 hour, right? So that's what we are saying. So what I'm saying here, you should start. So I'll go here, I'll come here. So let me take, so let's say this is a 1 day time frame or a 4 hour. So it's very important to understand this before we do a live trade. So let's say you find there is a channel, right? So let's say the market is moving, it's bouncing like here, 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 right, here, here. So let's say it bounce here. So you can see it's bouncing here. This is a channel, right? So it's bouncing here on this support. This is a resistance. So it's bouncing here on this support, right? So that's what we are saying from this strategy. We should go to a bigger time frame to find if that's the first thing. Go to a bigger time frame, which is day time frame and 4 hour time frame. So make a tactical decision whether to go long or short based on whether the market is ranging or trending on a bigger time frame, right? If it's ranging, so make a tactical strategic decision to say, are you going long or short? So for example, if you come here, as I said, you find out this was in a higher time frame, right? You can see this is a channel. So you can see the strategic decision, as you can see, is to go what? Strategic decision is to go, is to what? Is to go long, right? That's the first thing, right? Because it's hitting a support, which means this potential pay, right? This pay that you are trading or that you are trying to trade, it will gain value, right? The base current is being undermined, right? So which means in future it will gain value. That's what I'm explaining here. So make a tactical decision or where to enter and where to exit, right? Confirm the next time frame, right? To confirm a significant resistance, whether there is a correlating with other. So what I'm saying is, the first thing you find, you check with 1 day if this channel is confirming that there is a channel that is holding, right? How do you confirm? You start with a day, then you go to 4 hour. All right, we'll illustrate with an example, but for now you need to pay attentively. Start with the day, then you go to 4 hour. If you see this channel is holding significantly, which means it's a good opportunity to do whatever you want to, if you want to go long or short, right? So you need to confirm with another one, which is 4 hour. So after you confirm, which means if you want to go now to you have confirmed with 2 time frame, 1 day and 4 hour. So let's say now you go to 1 hour. This is 1 hour, 1 hour time frame, the same channel, right? You might find out there will be a difference, right? Maybe there will be a difference. This thing is now moving like this. It's just an example. These are markets in 1 hour, right? But you see, maybe it's now here. This is 1 hour. The thing that you need to know, the same channel can be the same. This channel can be the same. It can be equal. It can be a same channel on both. You are now on a lower time frame, right? So what I'm saying is, you now see this, right? You now see that you want to trade on 1 hour. What I said, you need to trade on, for me, when I'm trading, I use 1 hour, 30 minutes and 15, right? Or 5 minutes sometimes, right? You see it's hitting this, right? That's what we are explaining here. So your risk, what are you risking is 2% always, we know this. So the question is, what are the trading rules? What are the rules that you should follow? So your rules should be abide in terms of when you're going long or short, right? When you're shorting, so enter long if what happens. So overall trend on longer time frame, day 4 hour shows that the market is bullish. If in higher time frame that the market will go up, you should go long, right? As you can see with the channel. So testing a support line, if it's testing a support line, as we saw here, that this market is testing a support line here. It was illustrated on a higher time frame, right? So that's what you are saying, right? So let's continue. So look for a buy signal only on a small time frame. You have seen that it's holding on higher time frame, so you now look for a buy signal on a small time frame, whether it's 1 hour, 30 minutes, 15, to support the entry points. You now need to press a button, right? So you look for good entries on a shorter time frame. And also, when you're doing this, remember that you should check RSI indicator to avoid overbought or oversold condition. I think I've explained about this so that you won't be they won't get in your way those. So your market should be in a neutral zone, which means it should be greater than 50 or so forth. I think I've explained. So before I go, we said this is a lower time frame, right? So the thing is, you now you have an entry point, right? So the question is, how do you get out of the market? So your exit rules, you should follow rules. As you can see, I won't go through how do you short. It's just an opposite, right? How do you shorting? Your rules, you should have your rules, right? So entry rules, you have them. Now we're talking about how do you exit, right? We are on 1 hour or 30 minutes. How do you exit? So exit on next liquid position, very important. You exit on next liquid positions or supports or resistance, right? That's where you take your profit, right? I'll explain here. You need to understand, very important. So let's say you want to buy here. This is in 1 hour. We have moved to a shorter time frame, right? So where is your exit? Your exit, your stop loss. So your stop loss usually it's, let's say here, it's usually on exact, this is on exact what is it, round numbers. So if you are going long like this, you think the base current will gain value in future, right? So which means your stop loss should be just below. Please do pay attention, should just below this. Usually these liquid lines, they are round numbers, such as $50 or $11, right? Usually these liquid numbers, you find them on a liquid position, which are concrete numbers, or what you call exact numbers, $50, $11. So do you need to put your stop loss on this? No, you just put it just below here, below that exact number, the next exact number. Some people, they want to play it safe by saying the second, but you need also to gain profits in the market to buy more positions, because the more you move, you put your stop loss away. When you want to calculate with 2%, which means you are buying less position. That's what I'm saying. Very important to understand. The more you move your stop loss down here, which means you are buying less. So it's wiser to put your stop loss just below your stop loss, your exact number, right? So the thing is, what about take profit? Your take profit, this is a shorter time frame, so you don't need to take your profit. Take profit, if you want to, you can put it here, the next year, because you know that the markets will end up moving in a range, right? But mind you that you don't just enter. As I said, you wait for what we explained about this part. We said if there is a move, very important, if there's a move of 3 candlesticks up, what you call those white bulls or white candles or green candles, 3 candlesticks up, you wait, because most of the time this market, what they do, they retest many times. So you wait for 3 candlestick here first. It's an entry signal, so you put here, just here, so that you don't miss. I think I explained. You just put just above as a pending order, if so that you don't you avoid what you call breakouts, right? You wait for 3 candlesticks. Most of the time the markets, they bounce if you are on a shorter time frame. Very important concept. They usually retrace more often on a support or a liquid on a channel. When it's moving on a channel or resistance, they retrace, as I explained, that they usually retrace before it goes up, right? So you don't need to be greedy. Wait to see if it's bouncing this. So usually you see this more often on lower time frames, not here. Here usually if it bounces here, it doesn't do those things of doing this and this. It just bounces once and go. So we take advantage of this lower time frame to say, if it bounces on lower time frame, you don't want to be greedy. Wait for 3 candlesticks to go up, then you place just here. Your next take profit, you don't need to be worried about your next take profit. So that's how it is about this strategy. It's very important to understand this one. We explain in detail when I'm doing a trade.